specifically in Texas, a lot of the large markets in Texas saw nominal ADR growth of 15%, but it still remains lower than 19 levels when you factor in inflation. And so, what do you think some of the causes of that are?
Labor cost, material cost, everything has increased since 2019. And when you look at the ADR that has increased from 2019 to 2025, our cost has increased more than the percentage of ADR.
Hey everybody, welcome to SLTX Capital Insights. My name is Shumair and I'm a partner at SLTX Capital. I'm here with my good friend and partner Navid.
My name is Navid, principal and co-founder of SLTX Capital.
So today we got some interesting topics to dive into. I'm just going to quickly go over a rundown of what we're going to talk about as it pertains to the hospitality industry and what's going on today. So first we're going to talk about inflation and how it's impacted Texas hotel ADRs. We're going to talk about what hospitality REITs are doing right now and how they're adapting to the challenges and the changing environment in the market cycle we're at right now. We're going to talk about the SBA loan program and how they're starting to show some cracks in the hotel SBA loans that are out in the marketplace from back in 2021 till now. We're going to talk about timing the market and when's a good time to sell an asset. When should you decide to hold an asset or sell it? We're going to talk about management companies versus owner operating models. And finally, we're going to talk about the value of hotel conferences and if they're worth attending. So without further ado, a deep dive into some of these. Navid, what do you want to start with?
Yeah, let's start with the inflation impact on hotel.
Okay, yeah. So CoStar published a news article recently, I want to say last week, talking about how nominal ADR growth is actually high, but real ADR growth has been declining. And so specifically in Texas, a lot of the large markets in Texas saw nominal ADR growth of 15%, but it still remains lower than 2019 levels when you factor in inflation. And so I guess we could kind of talk about how even though on the top line things look like they're great, but when you peel back the layers, the ADR growth we've been experiencing has not really benefited the bottom line. What do you think some of the causes of that are?
Yeah, correct. So if you look at from 2019 to 2025 where we are today, just look at all the cost that's increased in the hotel industry, right? You look at property taxes, property insurance, labor cost, material cost, everything has increased since 2019. And when you look at the ADR that has increased from 2019 to 2025, our cost has increased more than the percentage of ADR. So when you peel back the layers, we haven't really seen much growth, and the bottom line is still stagnant.
No, I agree. I think that's been something that I think the industry is not really talking about right now. Everyone's talking about, post-pandemic rebound, that we're trending ahead of 2019 levels. RevPAR growth is higher than 2019 levels. But like you said, even though ADR growth's been, increasing by, let's say 15%, from 2019 till now, expenses have probably gone 25, 30% from 2019 Absolutely. Levels till now. So we're actually, net negative. And so I think that's probably why people might feel gaslit by the media or just, in general when they're like, well, the economy is doing great, but my bottom line is not doing great, So
and your bottom line's not doing great because you look at your expenses, right? Just compare your P&Ls from 2019 to now, and you'll see the year-over-year expense increases.
Yeah.
And you'll know exactly, like you just talk about, property taxes, for example,
right.
Just in Texas, as substantial increase year over year.
Yeah.
And we all protest our taxes, and we know how hard Texas is to reduce your taxes. And then you look at property insurance.
Right.
In the recent years, just Texas in general, property insurance has gone through the roof, right? And you hear about hoteliers complaining about this all the time. Insurance, taxes has all gone up.
It doesn't help we're on the coast either, right?
Yeah, correct.
So
that's I think that's all a factor into your bottom line. And then look at your labor, right? Mm-hmm. When we were in COVID, labor was a nightmare, right? To find labor was a nightmare. Coming out of COVID, people said labor is getting easier.
Yeah.
But then just look at a couple of years went down, and now your hourly wage that you're paying your front desk, you're paying a couple bucks more than you were in 2019, right?
Oh, definitely. And
so
that's like 20% more.
Correct.
You know what I mean?
Right. And so all these percentages on the expense side adds up, and then you're saying maybe a 12 to 15% growth on your ADR. You're probably net negative on the bottom line.
Yeah. And I think because the business model of hotels have shifted so much when it comes to the increased expenses, I think the only way you can be profitable is to really truly hone in on your operational efficiencies. You got to be dialed into the operations because, before you buy an asset, let's say you give it to a management company and I don't want to kind of go too deep into this, but this kind of, you know, pertains to the ADR growth. Things look good on the top line, but because there's so much structural change in all these line items, whether it's property tax, insurance, labor, you know, interest expense, supplies, you know, supplies have gone through the roof as well. You know, your linens, your cleaning supplies, your shampoo, you know, everything. If you don't have a handle on your operations, that ADR growth is going to erode. And so that's another reason why I think, you know, it really sets you apart if you're great at operating your asset, not just acquiring.
And that's a great point. And we'll get into this episode later when we talk about owner-operated assets versus management companies. And that's a great point that you bring up. And we'll deep dive into that later in the episode.